Hello traders, welcome to our new webinar. It's November 10th, it's Monday, 3 p.m. Central European time. So hope everyone had a wonderful weekend. Let me know who is here in our chat box if you're watching this on YouTube. I can see that Brian is here. Enes is also here. Okay, so I have some good news for you. Well, as you know, I have been working on these webinars for quite a long time now. Each Monday I present you a lot of my views, my charts, so I somehow try to keep you within my wave counts that obviously can be changing from time to time, but somehow I was always trying to keep you on track, and I was of course looking for some support for our work, for our sponsor and for our community, and I'm happy to announce that we have partnered with Eightcap. So if you love to trade stocks, cryptos, indices, commodities, FX, make sure to visit our website wavetraders.com. Let me just show it real quick, because we have a special promotion going on. So right now, for a limited time, you can get a 30% deposit bonus, or you can even get a 1-year TradingView plan with their opening account, and of course if you will follow the requirements. So if you are interested, make sure to look for this website, wavetraders.com. You will find the exact link below this descriptions, below this webinar. So if you just want to support us, and of course my goal is just to keep producing these webinars in the future, and of course if you will find any way to help us, of course I would love to see you signing up with Eightcap, and obviously I would try my best to provide my analysis on a regular basis. So once again, if you're interested in any kind of a special offer, either for a 30% deposit bonus or even TradingView plan, make sure to visit our link below the description of this video. Now, what's going on? As you know, Trump said that economy is in a good shape, and that they are making money like never before. He even mentioned that each US citizen will receive $2,000 US in dividends, and to me this this sounds like some kind of a stimulus and some kind of a approach that will once again bring inflation higher. So what is happening on the markets? Of course, markets loving it, especially if the economy is in a good shape. If the US debt is coming down, then of course stocks could do well, and that's why even US yields are higher as well. And of course, ideally, whenever stocks are trading to the upside, dollar will also move lower. So in my opinion, there's still a chance that this risk-on environment will send the dollar to the downside. It's very interesting to see that finally cryptocurrencies, Bitcoin specifically, is also waking up here away from 100,000 level, and even metals are doing well, while crude oil, as you can see, is somehow sideways. So now the big question is still what or where the US yields treasuries will move from here. I still think that somehow this market could remain trapped in range. Keep in mind that we still may not get US inflation data this week. It's scheduled, but of course, even if they are making some progress to reopen the US government, it's still far away from this to be confirmed. They need to pass a few votes before government can reopen. So it's not really clear if inflation figures will be released this week or no. Also, the big thing is that we are still missing a lot of jobs data, and that's probably one of the most important data before markets, investors, anyone who is involved in the markets will maybe decide or speculate what Fed may do next, because for now it's very, very uncertain. That's what could keep these treasuries somehow in this range market. But overall, I still think that even if we get some kind of another push to the upside here, that later on when we see a massive reversal lower, that's when the dollar could potentially bottom. But looks like that we are not at that phase just yet, because if you look closely here, hey Tom, so if you look closely here on this 4-hour time frame, it's not the very beautiful wave structure, but what's probably the most important is that even if you try to be bullish here, it's not really a clear 5 waves up from that low. Okay, somehow we are still, if you just hide these wave counts for a moment, we are still basically just trading in very big range here. Okay, so usually when that's the case and when you don't have any clear bullish impulsive structures, it's better to just to keep on track with the higher degree bearish trend rather than trying to call an important bottom here. So last week, as you know, I even posted this chart on X. I said that 125 is important resistance for the end of the week and that we should be watching for potential reversal. And so far we have seen a very nice reversal. So that was quite important evidence that maybe dollar bears are not done yet and that we could still see more weakness. Also keep in mind that we are now trading close to this potential trendline support, but I think that it can be broken. If we can see also an overlap with 99.15, then this would make me even more confident that we are headed lower, but possibly maybe only just to fill this gap here around 97.70, and then let's see what will happen down there. But at least for the near term, it looks like that the dollar could resume lower, especially now with this turnaround on stocks, and I will obviously also cover the S&P 500 as well in a bit. Now looking at the euro dollar, so last time, as you know, I was saying that I'm watching for 1.15 level. What will happen down here? We have the 78.6%, and also I measured and compared this pullback with the current one measured from the highs. So this one played out pretty nicely, and notice that now we already are making some overlap here, okay, with this 115.75. So that's so why this is actually important is because even if I would be bearish and would be expecting more weakness, okay, like maybe from some alternate wave counts, then wave 4 bounce should not overlap the wave 1, but this overlap occurred. So this makes me think that this is really an overlapping and corrective counter-trend movement. Of course, it can belong to some kind of a triangle here that is still unfinished, but at least for this week we could possibly see more upside. I'm not saying that we'll see straight push higher here into wave D, maybe some choppier, slower price action first, because I think that tomorrow there are some holidays as well, and maybe this is something that could keep market a bit muted. But overall, I just see on a smaller time frame, I see an impulsive move from the lows. I think that there could be more upside after some pause. I also think that this 1.1540 is interesting support, and I also posted that chart as well, I believe on X. So euro dollar, I think that still trapped in very big range, but it looks like there is chance that we will see a move towards the upper side of the range. Now looking at cable, also we fall through that support here, but now we are recovering back above the previous low. So whenever I think that we are in a downtrend and that this downtrend will resume, then what I want to see that the previous lows will act as a resistance on a retest. But now if this is not happening, in fact I see this as an impulsive reaction, a smaller time frame, it makes me think that we could see further upside. So I'm just wondering if maybe pound could really do well. Keep in mind that it has been very weak, so a lot of repricing could be happening, and possibly we could even see the retest of this or even broken channel here in the next few days. But of course the most important is that stocks will still stay supported, which could be one of the reasons why the US dollar could stay weak. Also Aussie is making some nice recovery, but not really breaking out. Keep in mind that we are still here trapped in this range, potential triangle. We stabilized last week at the lower side of this pattern, but not really breaking through this 0.6563 yet. But I think that if we can pass this level this week, then I think that much more interesting and beautiful price action and recovery could be seen later on. And as I said already last time, that even if Aussie will somehow stay slow here and euro dollar maybe as well, it may not be a bad idea to look at the euro Aussie, because if we think that we are in a risk on moves, then commodity currencies could do well. And the euro Aussie, as you can see, has seen some very nice reversal to the downside, actually twice if not 3 times here, from the 61.8%. so the first reversal down happened in July of this year, then in August, and also in October. And notice that this drop somehow was quite interesting, quite a strong one, followed by some rebound that we also talked about last week. So I think that this now sets up the perfect potential setup for more weakness. It's not only euro Aussie, we can see that a lot of those crosses are somehow possibly trading in very late stages of these recoveries, and I think that commodity currencies will really make some interesting comeback. I mean, pound versus commodity currencies is already turning around quite aggressively there. And also, if we look at another commodity currency, Canadian dollar versus the US dollar, this one also, despite a very deep retracement here, more than 4%, keep in mind that we see plenty of overlaps here. It's very difficult to count this as an impulse. You could count it in a motive wave structure still, maybe some kind of a leading diagonal, but even leading diagonal would see a free wave retracement at some point. So even if I think that market could bottom here with the leading diagonal, you would expect ABC deeper retracement towards the previous swing lows. But my preferred wave count, of course, is that was a WXY corrective recovery, and that we'll see more weakness. Jobs data from Canada last week triggered this reversal, and I think that this reversal was quite interesting from based on time actually and price. We were trading at the upper side of this corrective channel. Also this second zigzag was somehow similar to the first one, and also we came very close to the previous swing low here, which obviously limited the upside as well. So when I look at this current price action, maybe it's a bit too soon to completely confirm that we are topping out, but because it's just from Friday, it's just 24-hour trading hours or so, maybe even more. But I want to see like 2, 3, 4 trading days within this downtrend to make sure that that's not just a 1 day, 2 day event and the market is going back to bullish mode. So I want to see this reversal still to stay in place, or possibly even with prices reaching lower levels. But then in the middle of the week, if we get see some rebound, I think that this could be quite interesting short-term setup for potential further weakness. Of course, then we should stay just trapped below, trading below 1.14, 140 level. Okay, it's the closest invalidation level. Also, If we take a look on dollar yen, this one obviously is trading higher because of the US yields. I adjusted the wave structure here, but just slightly. I mean, it's the overall idea is still very similar like last time. We said that we are seeing an ABC recovery here with wave C now in late stages, but I firstly thought that wave C will end here, but what was the most important is that this pullback from the most recent highs has been made by 3 waves. Okay, so that looks like a wave 4, and it means that we should expect another push to the upside. Maybe we see a move closer to 155, maybe 155.50, which should be do or die zone for this recovery, because if I think that that's a really an ending diagonal, then we know that it should come into very late stages very soon, and reversal lower, of course, could later on be quite aggressive, which usually happens after an ending diagonal is finished. But as I said last time, from a trading perspective, you want some confirmation from the market that ending diagonal will finish. So you want to see push to a new high closer to this trend line, maybe even some kind of a thrower could show up. But then what's the most important is that from that new high you will see an impulsive strong sell-off. Okay, and then maybe after a day or two, if you will be able to recognize this reversal and a broken trend line support, that's when new opportunities could be discovered in the short on the short side, because that's when we would have a lot of confirmation to say that maybe this recovery finally has came to an end. Now, if someone is looking to buy the dollars and just trading some intraday swings here on a smaller time frame, then of course I still think that there is room for this price, as I said, to retest the highs while the market is holding here above 152.80. Now also let's take a look on crude oil. Now crude oil, as you know, is still, in my view, it's turning bullish. It's making some very interesting bullish setup because after those sanctions that were again presented like a few weeks back, crude oil turned aggressively to the upside, but now somehow stabilized, slowed down a bit here. But notice that this is now much slower price action, okay, compared to the previous strong recovery. So again, I think that we could be setting up for potential breakout of this bull flag formation. If you want, it's a corrective channel, so I'm thinking that we will see more upside. The breakout point could be around above 60.50. If we see a daily close at 61 or so, I think that we could see straight push to new highs. So until then, market could just remain choppy here, but overall I think that it should continue higher into wave C, I believe, while the market is trading here above $56 per barrel. So there's still plenty of room for energy prices to move to the upside. Also, this, as you know, if crude oil would really see more gains, will bring the inflation also to the upside. But overall, I just don't think that this latest price action will be important on crude oil, will be important for inflation if we get any data this week. Because firstly, in October, we were moving basically to the downside, but then recovered in the second half of October. So somehow crude oil were not just one directional that would be maybe needed for much easier forecasting the inflation data from energy prices. Now let's take a look on my list here, which will be silver. So metals are also moving to the upside, but I've been saying that before, that of course there will be, after this massive retracement, okay, after this massive retracement, there will be a lot of traders who missed the train here earlier, and especially investors, they will be looking to join the trend after this still very nice 15-16% of retracement. But of course, what they're just watching, everyone is just waiting, hoping that market will resume back to the upside. But I'm afraid that those that bought down here because they missed this trend, they will be just simply too quick on their potential exits, or they will just simply give up on the potential push to the upside, especially if we get another leg to the downside. Then unfortunately, that's how the market works. A lot of traders that were involved, that went or bought this market down here, will get liquidated, and that's when those weak hands will unfortunately be removed from the market, and that's when we would anticipate that market will actually recover. So for now, we are still seeing this bearish pattern setting up here. We have a very nice 5 waves down, followed now by 3 waves up here. So the 50% retracement is something that we tested just recently, and the 61 is also very important. So this whole zone up here, 50-51, is something to watch for. I just think that there is a lot of downside potential from here. Even the 78.6%, if it reaches, it's still fine for a wave B. Of course, I don't want to see any further upside than here, because then maybe we'll just stay trapped in sideways consolidation rather than a deeper ABC retracement. But for now, I will obviously stick with the deeper ABC retracement with potential wave C drop even closer to 42. Fortunately, I know that that's far away, but that's what the wave counts are telling me. It's not me who is making these lines, okay? It's just the wave count itself, that based on rules and guidelines showing us that silver did not finish a correction yet. Of course, I can be wrong, even wave counts. My analysis is not 100% right, but still, I mean, buying silver here from a short-term perspective, it's a bit risky. You just better want to wait something, some better levels down there. Also, why I think that this could be a wave B rally is just have to look at some other stuff. Like we have here gold-silver ratio. So as I said last time, we have 5 waves down, right? So that was 5 waves down. And after 5 waves, we can expect 3 wave recovery. And this is not in 3 waves yet. So that's a wave B. I'm expecting wave C. So before may I want again to look for potential opportunities on silver or metals in general, it would be much better to find them if we see and wait on ABC rally first here on gold-silver ratio, because then it would be much easier to find opportunities on the long side of gold, because based on the past cycles, you will clearly discover that gold and silver moved higher when we had gold silver moving to the downside, especially in this latest move from April. Now let's take a look also on, someone asked SPY analysis before market opened. I will take a look on the S&P 500 here. I'm looking at cash and futures. So firstly, daily chart covered. Notice that, or I should start like this way. Basically notice that here to new high, okay, when market gapped higher here last week, I said that we could see move closer to 7K, because that move up from October, when this October 10, when this massive sell-off occurred on Friday, we didn't have these 5 waves up, right? So basically I thought that firstly this impulse obviously will continue, but now since the market made an overlap and dropped below 6733, okay, this count has been invalidated. But what's good news is that that was only 3 wave rise to a new high. It looks corrective, and even this move on a smaller time frame looks corrective. So I came out with an idea that possibly we could be trapped in some kind of a running triangle formation here, and that we could still see more upside, but maybe this pose will now take a bit longer before this ABCDE formation is finished. So in the short term, since someone asked for the S&P 500 here, what I would be looking for is that, notice that we have this gap here now from weekly open. So maybe in Tuesday reversal you see some retracement, and then after this retracement I would anticipate more upside, ideally into that wave D. So if someone is playing maybe on some smaller scale looking for opportunities on the long side, I prefer to wait on your retracement. Never go just straight into the market, especially not on Mondays. Okay, when you can clearly get some reversals known by Tuesday reversal price action. So buying a dip here on a smaller time frame would make much better sense here at this gap rather than chasing up here. But for the but if you look zoom out a little bit, as I said, maybe we are still trapped in a triangle here, and that we could see more upside towards 7K, but after all of the subwaves A, B, C, D, and E are finished. Okay, and now also let's take a look also on some of the single stocks. By the way, as I said last time, if you're not our member yet, or if you're not familiar yet with this US single stock service, it's still in beta version, meaning it's still free. Okay, so you just register and you will have access to all of these, some of the major US single stocks listed here. And I updated a lot of charts yesterday on Sunday night, just to prepare myself and members for the beginning of the new week. So I posted a lot of updates for Adobe, AMD, ACML, Berkshire Hathaway, Coinbase, Ford, and even Nvidia. So if you're interested in these US stocks, make sure to check them out. Okay, but I still want to look now at a few of them here. So firstly, I want to look at PayPal. Now PayPal, as you know, I think it moved higher here, firstly because of earnings, and also there was some, if I'm not mistaken, some news with an OpenAI, that in OpenAI they will use PayPal as a first gateway for the payments or something. I'm not really sure, but I think it was something about this. But now still, when the market came back to the downside, despite these positive earnings that we had a lot of for the past year or so, still think that's a very interesting price for potential rebound. I mean, we have a very nice support here for potential flat formation around 65, and previously you can count 5 waves up. Then you also have this very big gap here, are above 82. Okay, so I think that that's a very important resistance at the upper side of a very big range. So I think in the near future there's still a chance that PayPal will see more upside while the market trades above 55.80. But if this level is broken, then of course much more weakness could be seen within a higher degree, deeper correction, which I think it's not finished yet, and that this bounce, if we get one, will be only temporary. Now also let's take a look on advanced micro devices here, AMD. This one has seen a very nice push here above the previous highs, broke above 227 level, but now it's making some retracement, and I think that this could be still wave 4. Maybe now, if this whole technology sector will be on the sideline, I mean, keep in mind that we mostly got a very positive, very strong earnings season, okay, but we are still missing Nvidia. The Nvidia earnings, I think, will be please correct me if I'm wrong, Nvidia earnings will be released on November 18 or 19th, and maybe by then we could see some choppy price action, some slower moves, which makes sense maybe if we really think that even the S&P 500 could remain stuck in this triangle formation. So maybe the AMD is also here still trapped in a wave 4, could maybe even retest slightly lower prices after maybe this rebound that could happen this week. We can see prices already higher in the pre-session, but then after another pullback here, I would anticipate that more upside will be seen. Of course, I want to see that market will stay here above 186 and definitely above the channel support, the base channel. If at any given point you have the price that breaks the lower trend line of a base channel, then you know that previous uptrend is done, okay, and that we are topping out, but we are not at that phase yet. Maybe we'll still see some interesting Christmas rally. Maybe Christmas will come early this time. Also, Berkshire Hathaway. So last week, as you know, we covered this one quite in detail. So we said that it has a very beautiful bullish pattern. We had previously 5 waves down into some of the previous 4th wave. What was the most important was this rebound out of this downward channel, clearly with impulsive price action on a smaller time frame. So last week we highlighted the importance of the 61.8% with an ABC drop here. Let me add the ABC structure. So this was actually suggested that that's just a temporary pause and that we could see a rebound. And so far we can see a very nice rebound, and it makes me think that we are headed higher now for wave 3, maybe just a wave C, but in both cases I think that there is room for this region here that was around 520, 540, which is the gap back from May when we got this disappointment from earnings. So it looks like that could be some magnet zone now for the next few weeks, but then let's see what happens up there. But definitely in the short term, would not be surprised to see more upside here. But as said, for more analysis and more updates on this one, maybe through the week, if the price action will change, make sure to visit us at wavetraders.com and register for free access on the US stocks. Now let's take a look on cryptocurrencies. So we already sent out some material, of course, definitely for members, but also shared some stuff on X as well. And what's probably the most important is that, and I also talked about this already weeks back, that like in at the end of 2017 and the beginning of 2018, at the end of 2017 Bitcoin has stopped out. Then we have seen on a small rebound on Bitcoin that alts did it very well, and some of them even printed a new high in January of 2018, while Bitcoin still didn't manage to reach a new high. And now when looking at this situation, maybe we could have some similar story. That doesn't mean that Bitcoin will not recover. It could be just maybe slower to the upside within this rebound. But when looking here at the crypto total market cap, excluding the top 10 here, we can see a very nice strong rebound followed by this overlapping price action that we have been tracking with members for some time now, for the last 2-3 weeks or so. And finally, we have some very beautiful price moves. I mean, we have seen a rebound from the lower side of this corrective channel. You can see here a recovery in 5 waves. We are just testing the trend line resistance here. So maybe we got some setback here, which it's total fine. Or maybe you get firstly a breakout and then a pullback towards the trend line that could act or turn into support. So after any kind of retracement, I think that this one obviously could see more upside. And if you look at the Bitcoin dominance here, well, this one has seen a very sharp reversal here at the beginning of October after first massive move to the upside, when everyone just we're not really sure what's going on, and everyone of course just moves out from alts into Bitcoin because somehow it seems like more stable cryptocurrency. So still after that dust settled, what we have seen is that a lot of traders, investors again were looking for opportunities on alts, especially because there were somehow somehow very cheap at some point, and that's what triggered a very nice rebound. But Bitcoin itself did not see such an aggressive move to the upside. It still managed to recover, as you can see here, towards the 61% here of total cap. But if you take a look here at the current price action, we are just turning back to the downside, and it really seems like we can be headed for much lower, especially if these trend lines now will be broken maybe this week, especially if alts will see pressure more upside. I think that of course this could slow down Bitcoin a little bit, but it doesn't mean that the Bitcoin itself won't rise. As I said, maybe it will stay sideways, or will be moving to the upside, which is much in much slower pace here. And if we take a look maybe at Litecoin, this one still, when zooming it out, I mean, even if I would say that I'm expecting maybe in the next few months that we'll see some kind of a major top on cryptocurrencies, if the stocks would also turn to the downside, it would be very hard for me to say that Litecoin has also topped out. You could still see some surprises in some of the alts that will fly higher, and maybe Litecoin could be one of them. I mean, it's a very beautiful price action ABCDE pattern. We recently bottomed at the lower side of this range, and I still think that if we can manage and recover above 150, this could trigger very sharp move to the upside. In fact, just recently we have seen a very nice rebound from that after that ABC pullback, and looks like that there is room for more upside. Even this looks like an impulse, so maybe some temporary pause would be totally fine, and then maybe you see one more maybe strong push to the upside. Also looking at Ripple, this one, as you know, and we covered this one a lot in the past, we bottomed very nicely here at the previous supports. We came close to the 38.2%. Now what's the most important, you have this very nice beautiful bullish formation. So I think that this one is just showing us some textbook stuff, and that we certainly could move to the upper side of this range while the market is trading here above $1.6. Now let's take a look also on Bitcoin. So what happened in Bitcoin is, notice that we came down into this 100,000 area that I have been warning in the past when the market has been trading up here, because just simply put, technical picture was not looking nice, okay, back then. But now the things are a bit different. If stocks are still in this risk on mode, which I think could resume, if the dollar is really ready to see a deeper pullback, as I showed you earlier, then it makes sense for Bitcoin also to stay sideways or even see more upside. We also have to respect the importance of 100,000 level. So I still would say that that's a very important level, like a pivot. Okay, so it's a bull bear line. Above it, market thinks we are bullish. Below it, you know that everyone will turn bearish. So that's one thing. The next thing is that we can still count only 3 waves down from the highs. So if you are our member, then let me just delete this. Then you know that that I have been looking for potential ending diagonal, right? That I thought that maybe that's the final top, and that we are going to see more weakness. But now with this lag has occurred only in 3 waves, what if we are possibly having with this kind of a structure a deal, and that we are just completing a wave 4 and we'll see more upside? So that's also something that we will have to consider. But as I said, maybe some better opportunities can be found elsewhere, not necessarily on Bitcoin, based on that crypto total market cap on others, as I showed you earlier. So here for Bitcoin, what should be maybe very important for confirmation that we are really headed back to the upside is if we can break these 110, 111 levels. Okay, if we can pass this level, this potential resistance zone, then of course we are back in bullish mode. If not, if we just simply, we will see our continuation back to the downside, and then through this week we fall back below 101,500, then unfortunately we are just most likely going to see much more weakness later on, and this consolidation from October highs will extend much longer in time, and probably into the most of 2026. So maybe this week will be very important what happens up here around as I said, 110, 111. We should really pass these levels out to make sure that we are resuming higher, because otherwise the break of the supports will bring to the table a lot of different alternate wave counts, and unfortunately a lot of them could be very bearish. Okay, traders, thank you very much for attention. Thank you very much for being here today. Make sure to subscribe to our channel, press a like on this webinar, and as I said at the start of the video, I'm happy to announce that we partnered with Eightcap. So we have a special promotions going on. So visit us at wavetraders.com for different deals. 30% deposit bonus, or even you can get a free TradingView access for 1 year. So make sure to check our website. Make sure to be with us again next Monday, same time, 3 p.m. Central European time. Traders, good luck this week and talk to you soon. Bye.